Welcome to The Explainer. Today, we're diving into what is arguably one of the most dramatic, high-stakes turning points in modern tech. For decades, Qualcomm has basically built an empire around mobile connectivity. I mean, if you've got a smartphone in your pocket right now, there's a very good chance Qualcomm's tech is making it tick. But that era is changing. Right now, the company is attempting something absolutely massive. They're making a high-stakes, incredibly risky bet to replace their declining core business with AI, data centers, and cars. We are literally watching a tech giant race against its own ticking clock. Now, to really wrap our heads around the scale of this pivot, we need to look at where Qualcomm stands today. In their latest reported quarter, they pulled in about $9.95 billion in revenue, hitting non-GAAP earnings per share of around $2.21. It's a massive number, right? But here's the catch. That impressive headline actually hides a pretty serious problem. It looks like a picture of perfect health, but under the hood, Qualcomm is effectively running two totally different businesses at the exact same time, and they are moving in wildly different directions. So let's start with the bad news. Handset chip revenue recently dropped by about 20%. That is a massive warning sign. Historically, smartphones have been the absolute bedrock of Qualcomm's revenue. But let's face it, the handset market just isn't the explosive growth engine it used to be. It's matured. And to make things even more stressful for them, they're facing a literal existential threat from one of their absolute biggest customers, Apple. Apple has been aggressively designing its own silicon, actively working to cut reliance on Qualcomm. If Apple completely walks away, Qualcomm loses a huge chunk of business, and they can't exactly just sit around hoping people suddenly start buying two phones instead of one. But flip the script, and the numbers on the other side of the house change dramatically. Qualcomm's automotive revenue absolutely skyrocketed by about 61% year over year. That is a totally different growth profile from smartphones. We're talking about a trajectory that just hit roughly $1.6 billion. It's a completely different ballgame. So what this really boils down to is a tale of two companies. On one hand, you have old Qualcomm, which is heavily, almost completely reliant on smartphones. Then, on the other hand, you have new Qualcomm. This is a highly diversified portfolio, covering smartphones, cars, the Internet of Things, PCs, edge AI, and even data centers. Management desperately wants investors paying attention to this new, diversified side. They're trying to fundamentally evolve from a mature smartphone chipmaker into a massive, broad-based computing platform. But let's be real for a second. This diversification isn't just some fun side project for them. It is absolutely essential for survival. Like we mentioned, the smartphone market is totally mature, and Qualcomm really has no control over broad consumer demand for new phones. Plus, that Apple threat, that is the ticking clock driving this entire massive transition. If Apple cuts down its reliance on Qualcomm components faster than expected, Qualcomm is going to hit a very painful transition period. They need new growth engines, and they need them yesterday. Which brings us to their first major lifeline, cars. And this is a brilliant illustration of why the automotive sector is such a colossal opportunity right now. Qualcomm isn't just selling one basic chip to a car manufacturer anymore. Modern vehicles are basically computers on wheels at this point. Think about it. They need high-performance computing, constant connectivity, rich infotainment screens, advanced driver assistance tech, fully digital cockpits, and incredibly sophisticated software. Since a car stays on the road for years and gets more tech-heavy over time, the sheer amount of computing power stuffed into each vehicle is just skyrocketing. And the great news for Qualcomm? That automotive surge isn't just a one-off fluke. Take a look at their IoT, or Internet of Things business. That segment pulled in around $1.8 billion. When you combine automotive and IoT, you're looking at revenue jumping by a very solid 28%. This is crucial because it proves Qualcomm isn't just blindly putting all its chips on one single replacement market. Instead, they're building out a really diverse ecosystem. The strategy is actually brilliant in its simplicity. Rather than making money just when someone upgrades their phone, Qualcomm wants to get paid anytime computing gets embedded into the physical world. And a massive driver of this, of course, is artificial intelligence. AI is creating a virtually endless appetite for compute power. But the thing is, it's not all just happening in massive cloud server farms anymore. It's moving out to the edge, meaning straight into cars, factory floors, robots, security cameras, and PCs. Qualcomm actually has a huge unique advantage here, power-efficient computing. You see, edge devices can't just plug into unlimited electricity, and Qualcomm has spent literally decades perfecting chips that balance top-tier performance and connectivity with super strict power constraints. But here's the thing, mastering the edge just isn't enough for the new Qualcomm. Now, they're going after the biggest prize of all, Management wants the market to see Qualcomm as a critical piece of the broader AI infrastructure puzzle. They're taking all that power-efficient expertise and pushing it directly into the highly lucrative but incredibly cutthroat data center space. This is a massive, fundamental strategic shift for a company that the world mostly knows for mobile phones. And honestly, the scale of their ambition here is just staggering. They're aiming to hit roughly $5 billion in data center revenue by fiscal 2027. And their longer-term ambition, they're mapping out a path to hit around $15 billion in data center revenue by 2029. Just stop and think about the gravity of that for a second. If a smartphone chip company actually manages to build a multi-billion-dollar AI data center business entirely from scratch, it would completely, fundamentally change how the market values them. However, we definitely need to pause here and ground some of this excitement in reality. A target is absolutely not the same thing as actual revenue in the bank. Investors can't just treat that $15 billion as a guaranteed sure thing. Qualcomm isn't exactly walking into an empty room here. The AI infrastructure market is brutally competitive. There are massive, entrenched players already fighting tooth and nail for every dollar of that spending. Qualcomm still has to prove they can actually win over the customers, deploy the tech, scale up manufacturing, and compete aggressively on both raw performance and price. But if they actually pull this off, it leads to their ultimate strategic vision. Qualcomm is targeting roughly $40 billion in annual non-handset revenue by 2029. Yes, $40 billion. That isn't just growth. That is a total ground-up reshaping of a legacy tech giant. That right there is the literal definition of the new Qualcomm. So, weighing this all up, we need to take an impartial look at both sides of the story. The bull case is definitely intoxicating, right? That 61% auto growth proves they can expand well beyond phones, and their decades of deep intellectual property put them in a great spot to chase that $40 billion vision. But the bear case is severe. The smartphone market is totally mature. Apple eventually leaving would just rip a hole right through their current revenue. AI data center competition is fierce. And let's not forget, breaking into all these new markets requires massive, expensive investments in research and development. And that could seriously squeeze their profit margins. So if you're trying to track whether this huge gamble is actually paying off over the next few years, don't just stare at the daily stock price. You'll want to keep a close eye on 7 key metrics. Number 1, is the handset revenue decline actually stabilizing? 2, can automotive maintain that incredible strong growth? 3, is IoT going to be a durable business long term? 4, is Qualcomm actually converting those big data center dreams into real hard revenue? 5, exactly how fast is Apple pulling away? 6, can they expand into these new arenas without completely trashing their profit margins? And finally, number 7, are these new businesses generating actual free cash flow that creates real value for shareholders? When you get right down to it, this entire explainer really just boils down to one single critical question. It's a race. The company is basically trying to replace its old growth engine while simultaneously building a bunch of brand new ones. So the ultimate question is, can new Qualcomm grow faster than old Qualcomm declines? Which leaves us with a final thought to mull over. Qualcomm spent decades absolutely dominating the smartphone era. Now, they're betting their entire future on the idea that computing is going to be everywhere, in our cars, our factories, and out on the edge with AI. If they pull it off, the company we know today is going to look completely different by the end of the decade. But if Apple bails and the smartphone business drops off a cliff before those new markets are fully baked, well, that transition is going to be incredibly painful. So what do you think? Are they about to pull off one of the absolute biggest pivots in semiconductor history, or is that clock ticking just a bit too fast for them? Thanks for joining us for this explainer. We'll see you next time.